Studios, it's the Strong Tower Financial Hour, where we help you tackle financial issues no matter how big or small. We help people go from being broke and scared to having hope with a plan. And now, here is your host, the owner and lead financial coach at Strong Tower Consulting, Justin Bennett.
And we are live here at the Webcast One studios. It is the Strong Tower Financial Hour. I am Justin Bennett, your host, and thank you for joining us today. And on today's show, we're going to have a theme this hour on talking about the role of insurance. Now, normally on this show, we talk about things like budgeting, how to get out of debt, savings, how to get along with marriage and money, kids and money. But today, we're going to talk about insurance. Now, I know if you're like me, sometimes insurance may not be the most entertaining topic, but it is an important topic, and we're going to talk about it today. So later on the show, we're going to have Bob Conroy with Conroy Insurance to talk about auto insurance, homeowners insurance, the importance of insurance in our lives. But then later today, I'm going to talk to you about life insurance, and the good news is I don't sell any of it, so you don't have to worry about me selling you a product, and we're going to talk about life insurance and the importance of that. But on our show today, we do have Bob Conroy with Conroy Insurance. Welcome, Bob, to our show.
It's great to be here, Justin.
Awesome, Bob. Well, thanks to be here. And Bob, tell our listeners a little bit about you and you in the insurance industry. You've been there for a couple of days.
Well, I've been there more than a few years. I worked for one of the local companies in Des Moines that headquartered here. Worked there 35 years. I started originally as an insurance agent, selling insurance back in Detroit, Michigan, and auto, home, and life insurance, and also specialized on the commercial side on churches. And churches have insurance needs just like any other entity would. Moved to Des Moines in 1979, and I had various jobs at that carrier. I retired from there after 35 years, 3 years ago, and along with my wife, Debbie, we started Conroy Insurance Services, and it's headquartered over in Windsor Heights. So it's just been a wonderful 3 years. We're able to do what we want to do and serve people the way we want to serve them, and just been a dream of ours to have an insurance agency to work with folks.
Very cool. Now, we're going to talk about insurance in a second, but part of the insurance that you're in, there's a phrase called trusted choice, and kind of walk us through trusted choice. What does that mean, and why should our listeners know what that means?
Sure. Trusted Choice is part of the Independent Insurance Agents and Brokers of America. In Iowa, it's the IIAI, and sometimes it's been referred to as the Big I, and it's the independent agents. It's the agencies that represent more than one company. And several years ago, they started this campaign of asking agents to voluntarily go to a pledge, and it was called the Trusted Choice Pledge, where we put the customer's interest above our own and treat people, not as policies. And we, of course, took that pledge immediately when we started our agency. And so on the front page of our website, you'll see a link out there, and it goes into all the specifics of it. But it's the way you want to be treated. It's the golden rule. Absolutely.
And with all my clients, I always like to send them your way because of the way you and your wife, Debbie, treat the clients. You really treat them like people, not policies. I like that phrase. And people really feel that, and they feel like they learn. We have a fellow mentor in Dave Ramsey, and he has a saying, a heart of a teacher. Right. And I noticed that you guys have that, and that's one of the reasons why we're happy to have you here as sponsors and send you guys our clients. So tell us about insurance. Why is insurance important? From a 30,000-foot view, auto insurance is important, homeowners insurance, renters. What is insurance, and what does it do for the consumer?
Wow, that's a question I could go on for about 4 hours. And I would say to start with, insurance is a way of peace of mind. It's a risk reduction, just as you talk to people about reducing debt and getting debt out of their life, because debt represents risk. And insurance is a way of transferring risk of ownership, risk of your activities, and so on. You protect your equity in your house, your car. You preserve the earning power that you have in terms of liability. So it's a risk reduction device, and it also is peace of mind, and that's the big thing we sell. I've heard people say, well, I've had insurance for 20 years, I never turned in a claim, I never got anything out of it. But it's not true. What you get is peace of mind. You know that if anything happens, you're going to be put back to where you were before. It's to make people whole. Example, these tragedies, like in New York with a hurricane that came through, that perfect storm. There's folks there that still haven't been taken care of. They were in areas that that had flooding, and that's a federal program, and they're dependent on FEMA and so on to come in. At the end of the day, there may be a few grants, but mainly this is going to be low interest loans, and they've lost their equity. And that's what insurance does. It preserves equity and it gives you peace of mind. That's the 30,000-foot view.
Awesome. Well, let's go down a notch. Let's talk about auto insurance a little bit. And obviously, there are state laws that require us to have auto insurance, and there's different types of insurance. There's liability, and then you can get comp and collision. Kind of walk us through the different types of auto insurance.
Okay. Yeah, there's different parts of the coverage, and the auto policy is in effect like a package policy, because you start out. Let's kind of work down in your order. Liability insurance. That's if you're in an accident and you cause bodily injury to somebody else, you hurt them. You could be held legally responsible for that, and so your auto insurance policy will respond to that. First of all, to be held legally responsible, you have to be sued and found negligent. So your policy is going to provide for legal defense. So you're going to have attorneys representing you in court, and a professional team of claims adjusters to adjust the claim on the front end. So that's the liability part. There's a subpart to that for property damage. So if you hit something and break it, so you got bodily injury and you got property damage. So the property damage could be another car. I guess the worst case scenario I could come up with was somebody bumping a train and knocking it off the tracks, and doing all that down. But property damage. Let's see. Next in there would be medical payments. The medical payments part, sometimes it's shortened to med pay on the policy. That's for you and the passengers in your car. And so that's first party payment. It'll cover your injuries or your passengers as a result of an accident in the car. Good coverage to have. Moving on, you mentioned collision, and collision is physical damage to the car. So that's colliding with another object. Could also be, by definition in the policy, would also be an upset where you've turned the car over and, like, say, go in a ditch and you hit. That's considered a collision loss too, by definition. The next part of the physical damage is comprehensive, as you mentioned, but typically now in most of the policies they'll call that other than collision, because comprehensive implies it covers everything. Comprehensive, but it doesn't. It doesn't cover collision. It doesn't, and there's always exclusions to everything. So other than collision is that part. This would be things like vandalism, glass breakage, those types of things.
Very good. So when it comes to someone, if they're going to, say, visit you, by the way, I encourage all my listeners to go to ConroyInsuranceLLC.com, their website, and call to get a quote. But if someone's going to get auto insurance, how is their premiums figured? What goes into that?
Well, before I do that, there's another coverage, too, on the auto I'd like to cover, and
Go
that's
ahead.
uninsured motorist.
Absolutely.
So this is really important. If you're injured in an accident or somebody in your car, and the other party does not have auto insurance, no liability, and no assets, this is coverage that will cover you. And there's a subpart to that called underinsured. So sometimes people have low limits, and again, that's coverage for yourself. Often when you go shopping for that cheap insurance online or use a price gun or something like that, a lot of those coverages get cut back and the limits are cut back on it. So that's something to look at. And then I think you asked, how do you get a quote like that?
How do you get a quote, and how is a premium? How do you figure the end premium? So if I go,
okay. Well, it's a magic box, and it really is. When I started in the business years ago, we'd have a rate card, so at different rating categories. So based on age, so like a teenage boy, teenage girl, young marrieds, young singles, married couples, and elderly, and so they'd have these different categories. There weren't that many of them, and then you would figure out how many miles to work, how many miles total, and just a few factors. So it all fit in a simple little rate card, and you'd follow one line over, and boom, there's the rate. Well, today it's very, very, very complicated. It takes sophisticated computer programs to spit a rate out. I've said that you could have identical twins come into the office, married to identical twins, both working at the same job, their spouses working for the same company, 2.3 kids, living on a cul-de-sac next to each other. There's no way to know what the rate's going to. There's so many little factors that come in.
So what are some of those factors?
Well, and some of those are proprietary by the carriers, but credit, and I think you've talked about that before. Credit is a factor in there. The amount of time you've lived in a house, education. There's just so many of them in there, and these all factor in, and each carrier puts different emphasis on different ones, and it may vary with age and time and so on. So it's a complicated thing. The good news is, because of the internet and other things, an agent, or you can even do this yourself, but talk in terms of our workflow. If you were to call us, we would get the information necessary to quote you with one company. We have a program that we put it into, and this is all secured on internet servers, and it would actually go out to 7 different companies and bring back an accurate rate based on all those different factors. So at that point, we know what the rates are. Probably the more important part of that, though, is making sure that we're asking for the right thing, getting the right coverages. And I got to tell you, the last 3 years has just kind of been an eye-opener for me as we look at people's coverages and find out all these missing pieces, limits that are too low, things that are just missing completely. Especially, somebody that lives in a townhome community and the covenants and so on that require certain types of coverage. We see those incorrect all the time. And it's amazing how many single-family homes now have some kind of an association, and there should be some coverage in there from the policy. So we really dig into and look at those things.
And that's one thing that's good about you guys being an independent agent is, again, you said 7 different carriers or companies that you can search. And so not only it's price, but does it fit what we're looking for? Mm-hmm. And so that's very good. Well, when we come back here at Strong Tower Financial Hour, we're going to continue our conversation with Bob. We're going to talk about homeowners insurance and renters insurance and things that you need to be looking for there. And also we're going to be talking about some things about insurance that maybe you never knew. Where did insurance come from? Where did it start? We're going to talk about that as well. Later on today's show, we're also going to talk about life insurance and why you need that and what to look for there. And we'll talk to you about it when we come back.
Leach, owner and general manager of Service Legends. I brought along a couple of the home comfort heroes.
Hi, I'm Tammy Wells.
I am Nick Wonderscheid.
I'm administrative manager
I am the senior technician
from Service Legends.
It seems like every good thing, when you feel it to the bone that it's good, there's a lot of hard work put behind it. I don't think that you can fake it and have it turn out good.
You know, if we seem like, okay, that's just weird, it's just a furnace, why would you believe so deeply in a furnace? It's not just that, you know, we want to show the world that you can have good service.
Yeah, I mean, it's got to be, it's your home.
You know, it's built into our daily trainings, it's built into our culture, that we're going to do whatever it takes to have each client say they love us, period.
That's why we spend all the hours in the training that we do. And if we guarantee it's going to be a good experience for you, or else it's free, what type of work do you think we're going to do?
There is a guarantee.
Temperature selection guarantee, fixed rider it's free guarantee, comfort guarantee, best value guarantee. All of these guarantees hold us accountable to ensuring that we exceed your expectations. And if for whatever reason we'd fail and we can't make it right, we guarantee all of those guarantees with a 100% money back guarantee.
I mean, if you don't think that your technician can fix it right, are you going to say that to a client? No.
You don't have to worry about having a technician come to your house.
We drug test, background check all of our team members. We put safe people in your home. Each and every one of our service techs, 400 hours a year in training.
You tell it the minute they walk in the door. They know what they're doing, they've done their homework, and they actually truly care about what you want.
Because at the end of the day, you're the person that makes sure I have a job.
They're going to be listening. They're going to want to know what your challenges are. Then they're going to come and give you options, and you get to choose.
If I'm there to help and I make it easy and painless, I did my job right that day.
Well, when it comes to your comfort, safety, and your family, you know, you don't necessarily go buy the most expensive, but you get the most bang for your buck.
Oh, it's worth it, because there's a lot of people that will find a way to get it to work right now and then leave and then come back, charge you again, and the cycle just repeats itself. So when I'm out there looking at the furnace, I want to find why it failed today. How can we change the part today with something that you're not going to have to worry about? Is it worth changing the part today? I mean, you can put a lot of money into a furnace. I can fix parts all day. There's good job security in that for me, but is it the right thing for you?
I get a lot of the phone calls of after the technicians are there. They're just in awe. They're like, wow, you guys are great. I mean, I don't even know what to say. You guys are great. Everything you did was perfect. It was great.
Keep going though. I like this.
Just give us a try. I'm going to take all the risk.
I've got the time to make this right. I've got the support to make it right.
Just check us out.
And if you don't see the value in what we do,
I mean, fixed right or it's free or 100% money back.
enough said. I'm Brian Leach, owner and general manager.
And we are back here at Webcast One Studios. This is the Strong Tower Financial Hour. I am Justin Bennett, your host, and thank you very much for joining us again. Last segment, we had Bob Conroy on with Conroy Insurance, LLC. We were talking about the need for insurance and what is insurance and why we need it. We were also talking about auto insurance, and we'll be talking about in just a second homeowners insurance and renters insurance and why it's important to know a few things there. Later in today's show, we are going to be talking about life insurance. And again, I don't sell any life insurance, so when I'm talking to you, it's going to be more about teaching and educating than it is selling you a product. Well, again, in our segment here today, we're going to have Bob Conroy with Conroy Insurance, LLC. And Bob, you're kind of a history buff when it comes to insurance. So share with our listeners, where did insurance even start and what was the whole, why did we even get insurance in the first place?
Well, a lot of it's because of ships going overseas looking for spices. And
Really?
Pepper in particular. Pepper was an incredibly expensive spice. It was, and it came from just a couple places in Indonesia, and it would travel into China and overland and all the way across on land routes and caravans. And by the time it made to Europe, it was marked up so high. It was very, very expensive. Well, when they figured out how to circumnavigate Africa and move the ships over, if a ship could make it over, fill up with pepper and other spices and make it back, it was worth a fortune. And but then if it didn't make it, you lost everything. So insurance was pooling those risks together. So everybody would put a little money in to cover the few losses, but they would share in the gains of the ones that came back. It's kind of your basic, the losses of the few are shared by the many.
Wow, and so where is it, 1400?
This was actually 1601 was the first time it started where there was legislation in England. Then a little bit later, you had the Great Fire in 1466 was the Great Fire, and just about wiped the entire city out. A little bit after that, as things got built up, there was a coffee shop in London where people would meet to trade off risk in that. It was called Lloyd's Coffee Shop. And that was, I got the date here, I think it was 1688. And so that became Lloyd's of London.
Wow.
Over the years. And you can insure anything in those types of things. And so it was a sharing thing. I say the first insurance company in the United States was in 1735, the Friendly Society, and that was in Charleston, South Carolina. It went out of business in 1740, and then the surviving oldest company is the Philadelphia Contributorship, and that was obviously in Philadelphia, 1752.
Wow.
Goes
So
back.
insurance has been around for a while. Well, let's talk about homeowners insurance a little bit, and tell us when someone's shopping for homeowners insurance, what they should be looking for, and because obviously price is part of it, but there's more than just the price of the premium.
Well, and I just mentioned a company going out of business, which is kind of scary. You spend this money all these years, but the most of the insurance that you would buy comes from what's called an admitted carrier. And if you're admitted to do business in the state, you're part of a guarantee association. So that if a company did happen to go out of business, then this guarantee association would step in to fulfill those obligations, and the other companies actually share in those assessments to make sure that happens. So it's a great thing to have, and it gives you a little more peace of mind. But yeah, the homeowners, I talked about the coverages and what's in it. With the homeowners, you have the coverage for the structure, the house, the building itself. Then there's personal property, your contents. There's liability, and the liability also has a med pay, just like auto insurance. But the significant difference, the medical payments for the homeowners is only for people that do not live in the house. So it's not a medical policy for people in the house.
So if my children get hurt on the property, I can't put a claim in.
No, but if they were injured in a car accident, that would trigger
Interesting.
coverage.
Interesting.
Yeah. A big difference. The liability is just like with auto. If you're negligent, you're going to get and you get sued, This will provide legal defense and payment on your behalf, for the judgment and so on. Another very important one is additional living expense. If because of a covered cause of loss you're unable to live in the house and it's being repaired, you have to live somewhere else. Well, the insurance companies will write you a check and they'll cover the expenses over and above your normal living expenses to continue on. And it's a very important coverage.
Now, is homeowners insurance, the premiums, are they figured very similar to auto? Are they different? How is the homeowners premium figured?
Well, they're the biggest thing is the amount of coverage on the house itself, and then the location. Probably those two things. And the location will take into account whether or not there's a fire department. If you live in a rural area that has no fire protection, or you're far away from a fire station, or there's not a lot of water in the area, your rates are going to be higher than they are in the city. So those are probably the two biggest things. They'll take into account your claims history, just as they would on auto. That was the other thing that went into the insurance rating score for auto insurance, but your rating history, or claims history rather. And those are probably the biggest things. The condition of the house, the age of the roof, wiring, plumbing, all of those factors enter in.
So when folks are looking for homeowners insurance, what are things that typically get overlooked, or maybe they spend too much on insurance, or they don't spend enough on? Kind of walk us through things that get overlooked or too much emphasis on when looking for homeowners insurance.
Well, I find a lot of houses that are overinsured because, especially up until a few years ago, there were a lot of mortgages that were that were insured to value, and insurance covers the replacement cost of a property, not the market value. They're different things. In fact, and so if you've got replacement cost coverage, you may have paid more than what it actually costs to replace the house.
Wow.
And
So
so
if
we're
we're spending too much overinsured, that could affect the premium then. Absolutely.
Yeah, you'll pay more and you don't get any additional coverage. So what most agents will do is they'll do what's called a cost guide. They'll figure out approximately what the house would cost to repair. So we'll find that at times. We'll also find just the opposite, where they're way underinsured, where they haven't looked at it for a long time. And so they may be 30, 40, 50% underinsured to value. And while that saves you premium, if you had a loss, it's not a good thing to have at that time, not enough to replace the house. The other thing, usually the personal property, not a problem. It's a percentage of the house itself, and typically the companies put in enough money in there, enough limits that's not a problem. I find liability probably too low in most cases. And then we definitely encourage people to get what's commonly called an umbrella policy. More accurately, it's a personal excess liability policy, and that sits on top of both your homeowners and your auto insurance. So typically $1 million, maybe $2 million of coverage. This is liability coverage. So if you exhaust the limits in either one of those, this comes in and goes right on top of that coverage to cover judgments.
So if someone gets an umbrella policy, just to repeat then, and they have it covers over and above the homeowners and the auto, and so if you get sued or whatever and you used all of the policy there, it goes into the umbrella up to $1 million, $2 million, whatever you determine the amount when you sign up for the policy.
Correct. I strongly recommend that you get those.
And I think, if I remember right, umbrella policies are fairly inexpensive, are they not?
They are, and there's rating factors in there. Number of people in the house, number of cars, teenage drivers, of course, make a difference. So
my oldest turned 15. Help.
Yeah, save your money.
What about renter's insurance? I work with a lot of clients who rent, and they don't have renter's insurance, and that to me is very scary. Number one, renter's insurance is almost not free, but almost feels like it. But it is so needed. Why do you recommend folks get renter's insurance for those who rent versus own their home?
Well, it's the same reason. You take the coverages I just listed in the homeowner's policy. The only thing missing is the building itself. The building's insured by the building owner and the landlord, but you have your personal property. The additional living expense is a big deal, and of course liability. If you cause something to happen that you get a lawsuit, this again steps in, legal defense and payment on behalf, med pay on your premises for guests and so on. Exact same reasons you need a homeowner's insurance.
Absolutely, and I'll never forget, I actually had a client, before they were my client, they were renters, and they had renter's insurance, and their apartment caught fire. And within 24 hours, there they were with a check to cover the needs.
Yeah, so I love this industry. I mean, we take care of people, and we preserve equity, and we get people back to where they were before. It's wonderful.
So walk us through the quoting process. If someone wants to quote their auto insurance or their homeowner's insurance, or maybe they thought that umbrella, wow, I've never looked into an umbrella. How do they quote their insurance? Let's quote with you guys.
Well, I got some stats here, and it looks like this is from the Insurance Industry Impact in Iowa from the III, the insurance industry, iowainsuranceindustry.org. And something like, well, first of all, insurance is 10.8% of the gross domestic product of Iowa. It's fun.
Wow.
It's right up there with corn and soybeans. We're a big industry there. And to get I guess I don't have it right there, but it's something a little over 40% of all people looking for a quote will go on the internet to start. And why not? It's independent of time and location. You can usually get a multi-company quote from a website somewhere. And of course, we would recommend you come to our site, but I just encourage folks to do it. I've met many of your clients, and I've seen many of them haven't checked their insurance. So every 3 years, it is a good idea to visit with your current agent and see if they will look and do a review. If you're not getting much of a response, go on the internet and have somebody look at it. The other thing is there's two different types of insurance agents. There's what are called independent agents, like what we are. We represent multiple companies, and we can match you with the best company in terms of what your needs are. But there are also those that are called captive agents, and they represent a single company. So if you're with a captive agency company, you might want to check with an independent agent just to make sure you're with the right company.
I agree, and one of the things again I like about you guys when I've sent my clients your way to do a quote, and you give them a one-page kind of overview where they are and what you could provide. I've always liked it that you're brutally honest and upfront and saying, you know what, actually you're okay. Why don't you wait 6 months and check back in? Or you know what, we're maybe too high on this. Why don't you go raise it with your current carrier? But then there's also clients that you guys can help save money on and actually have customer service and be able to work with. So that's why I'm glad that you call you friend and glad to have you on the show today. Well, that was Bob Conroy with Conroy Insurance LLC. Be sure to go to their website, conroyllc.com. We'll be back to talk about life insurance in just a bit.
From the RE/MAX Real Estate Concept Studios, this is Webcast One Live.
Drug and alcohol addiction slowly steals a person's identity, tearing away pieces of their life little by little until one day it seems like the hope of a happy future is gone and there's no chance of getting it back. Here at St. Gregory Retreat Centers, we can assure you that there is hope. Our unique approach to recovery begins with the understanding that the dysfunction and damage caused by addiction can be overcome, not just dealt with. Don't let another day go by. Call St. Gregory today.
My name is Justin Bennett with Strong Tower Consulting, where we passionately coach individuals, families, and businesses to make better financial decisions that help create success and eliminate financial stress. I offer a free 30-minute consultation where we find out where your situation is. I explain how I do my coaching services. Then it's up to you whether you want to continue. The Bible has, depending on who you believe, 800 to 2,000 scriptures that talk about money alone. So it's a pretty important subject in God's eyes. That's one of the things that I enjoy doing, is help them see God's ways of handling money. You know, it's interesting. Most people that I ask, what would it be like to be debt-free? The common response is, I don't know. I don't think it's possible. But in 90 days, most of my clients go from, I don't think it's possible, to, I'm excited. In 2 years or less, I will be debt-free. There's no tricks, no gimmicks, nothing being sold here. It's just learning how to do money well. This is Strong Tower Financial Hour, where we help people go from being broke and scared to having hope with a plan.
Hi, I'm J. Michael McCoy for Adam Albrecht, financial planner and AO Wealth Advisor. Adam, tell the folks listening today, just who is Adam Albrecht?
I am a certified financial planner, and I created AO Wealth Advisory a couple years ago to be able to help people with their finances all the way from basic budgeting on to retirement and estate planning.
All right, now that we know who you are, what do you do? How do you help people?
I help people by focusing on 3 key areas. on what they earn, how they invest it wisely, and then also where they give it on, whether it's onto charity or onto family, but do it from a biblical base, using verses that have been around forever, transcendent knowledge that's been around 4,000 plus years.
Call Adam Olbrecht, a financial planner with AO Wealth Advisory. Give us your number, Adam.
Yeah, 515-224-7849.
Advisory services offered through Investment Advisors Corp., an SEC-registered investment advisor. Securities offered through Broker Dealer Financial Services Corp., members FINRA and SIPC. Thanks for watching.
And we are back here live at Strong Tower Financial Hour. Again, I am Justin Bennett, your host. Thank you again so much for joining us today. Earlier on our show, we had Bob Conroy with Conroy Insurance LLC to go over insurance. Today's theme is the role of insurance in our lives. Normally on this show, we, again, talk about budgeting, how to get out of debt, saving, the basics. But insurance is one of those basics that we need in our lives, and fortunate or unfortunate. And so that's why we're dedicating our show today. I talk about a topic that may be hard to understand, but want to go through with that. Hope you guys enjoyed the Super Bowl. Last night was Super Bowl Sunday. I was cheering for the Ravens. My Packers didn't make it, but go Ravens, and Ray Lewis got to finish on top. Way to go. And so I had to throw that in there. Well, as part of the show today also, not just talking about auto insurance and homeowners and renters insurance and the overall need for insurance, I want to talk to you today about life insurance. But before I do, I want to make sure one thing that you guys know. I do not sell life insurance. I don't sell any kind of financial product. Why does that mean something to you? Well, over the next little bit, as we start talking about insurance, you don't have to worry about me trying to sell you on insurance because I don't sell it. I'm simply here to teach, educate, motivate, and encourage you what looks good, what doesn't look good. In my opinion, just simply all it is my opinion, and hope you get a chance to learn from that. So again, with insurance as a whole, the whole idea of insurance is to transfer risk. Transfer risk from what? Well, insurance, when you purchase insurance, whether it's homeowners, auto, life, etc., the whole idea is if you have a big event, house fire, car crash, death in the family, what have you, the goal of insurance is to be able to pick up the cost of all of those things that most of us can't afford on our own. So again, that transfers that risk. With life insurance, that is something that we're going to spend the rest of our time here today talking about. And with life insurance, there are two basic types of life insurance. There is term insurance, and then there's permanent insurance. Now, with permanent insurance, there's a lot of different ones that fit under that heading, sometimes called whole life, sometimes called universal life or variable universal life, and a lot of permanent insurance has cash value a part of that. We'll talk about the differences more in a second about term and permanent insurance and which would I recommend. But the whole point of life insurance is simply this. If you provide an income for your household and you were to pass away, let's say you bring $50,000 a year to your household, whether you're single, married, divorced, but either way, let's just say for an example, you bring in $50,000, you pass away. How's that $50,000 getting replaced so they can keep moving on financially? That's the purpose of life insurance. And in fact, it's interesting. If you were to really call it by its real name, it should be called death insurance because we don't get it until you die. But the interesting thing about it is that life insurance is, again, therefore, after you die. Life insurance, typically, when you do that, you have beneficiaries. And most folks, they either do their spouse or their children or grandchildren. If there's no family, they may leave it to their church, a nonprofit organization, one of those type of things. What I recommend for insurance when you go for life insurance is the general rule of thumb in the financial planning world is about 8 to 10 times your gross annual income. Now, sometimes you may push a little towards 12 or you may lean a little towards 8, but we'll just say 10 for today. 10 times your annual gross household or your annual gross income. So again, using America's average of $50,000, if you make $50,000 a year, you should have at least $500,000 in life insurance. And we'll talk about in a second. It's actually not that expensive if you do it right. Well, why 10 times? Why not 20 times? Why not 3 times? Where does 10 times come from as a general rule? Well, the reason is this. if you were to pass away and today was the day and you had life insurance, and let's say you're married and the beneficiary is your spouse, you make $50,000, you have $500,000 life insurance policy. They can then upon your death, take that $500,000, put that in a good investment with a good financial planner or advisor, and then the goal is to live off the interest of that $500,000. Let's say you make an average on that investment of 10% a year. Now, I know some of you might be thinking 10%, that's hard to get, and I'm not going to debate the interest rate today on what you can get on your investments, but for easy math, let's just say 10% on a $500,000 investment is $50,000. So that $500,000 then properly invested without using much or any of the principal will get you back financially and replace your spouse's income in that instance. Now, not too long ago, my wife and I, we actually raised our insurance premiums. My income is starting to go up. My business is taking off, and I raised it. Now, it's kind of funny, and the joke I have is I told my wife, Jessica, how much I want for life insurance on me, and she giggled in a way, guys, that I've never heard her giggle before. And it got me kind of worried. Maybe I got too much life insurance. That old saying, you're worth more dead than alive. Well, I can tell you I'm definitely worth more dead than alive financially. And kind of got me worried. And just kidding on that. But again, 8 to 10 times insurance. Now, again, there's term insurance, and then there's permanent insurance. We talked about that a second ago. And with term insurance, it's for a specific term. Whether you get 10 year of term insurance, 15 year, 20 year, 30 years, those are the standard in the business, anywhere between 10 and 30 years term insurance. And so when you get your policy, it's good from that date then for the term. And then that's it, unless you get more insurance, or I should say get new insurance on term. Permanent insurance is simply that, permanent. So once you sign up for permanent insurance, and as long as you keep making your premiums, it is good all the way up until death. Now, I just did some quotes here today just to kind of give you a pricing on that. On a term policy, if you were to get a $500,000 term policy, 20 years, and let's just say, for example, you're a 30-year-old male in Iowa, and you're healthy, meaning you don't smoke, you have the right weight, you don't have any health issues, you can get a $500,000 term policy for $20 a month. $20 a month. That's it for $500,000. I mean, I don't know about you, but I can take $20 and spend that in 4 runs at Starbucks or pizza. I mean, anymore, you can get pizza and it won't take long to get the $20, $30. So once a month, sacrifice going out to eat and put that towards your family by protecting them with $500,000, whatever your need is. But here's what's interesting. Permanent insurance on only a $125,000 policy, again on that 30-year-old male that's healthy, is $145 a month. Well, why do they charge more for permanent insurance than, say, term insurance? Well, normally the reason why is this. You're being insured for your entire life, and so there's a greater risk. And with any time in insurance, whenever the insurance company takes more risk, you're going to pay more premium. But also, with most permanent insurance, we'll just say whole life just to keep it easier, they have what's called cash value as a part of your insurance. Now, why is cash value important when it comes to the permanent insurance world? Because with cash value, what they'll sell you on, whether you're talking to an insurance agent or a financial planner, is that over time, you can put money in this cash value vehicle as a part of your insurance. And if you ever have an emergency or you want to use it for part of your retirement, you're putting money back each month along with the insurance policy. And so it sounds like a very good idea. Here's the problem, though. And I might make a few financial planners and insurance agents upset about this, but I have to share it from my paradigm. I'm not a fan of permanent insurance, unless of one reason. You've already got permanent insurance, and you're no longer insurable, meaning you got insurance before, and now you can't get it due to a health issue, or you don't qualify, or there's something there that makes the premium so sky high, it doesn't make any sense. But other than that, I don't recommend it. And here's why. You've probably heard the saying out there, buy term and invest the difference. Why should we buy term and invest the difference? Well, again, in our example, on a $500,000 20-year level term policy on our 30-year-old male, $20 a month. Or you can go get a permanent insurance policy for $145 a month and only have $125,000 worth of coverage. So if you take $145 a month, subtract that from 20, That is $125 a month that you could be saving. And if you take that $125 a month that you're saving and invest it in a good mutual fund using a good financial planner, how much would that be in 20 years if you did that? Well, that would be, and I can't find it on my little cheat sheet here, but my mind wants to say I believe it was $125,000. And think about this for a moment. Here's the interesting thing about permanent insurance that most people don't tell you about, or agents out there. Cash value sounds really neat and good, but here's what they don't tell you. The first few years, and they have to disclose this, so you see there in their disclosure, the first few years on a permanent insurance policy, it's all fees straight to the insurance company. It doesn't build up any cash value. There's part one. Part two is you can borrow against your cash value. That sounds good at first, but think about it. Why would you want to borrow on a savings account that you've put money in? So you're having to pay interest on your savings account. I don't want to do that. I don't know about you, but that doesn't sound smart to me. But here's the part about permanent insurance that I guess at the end of the day really bothers me. Let's just say in this example, 20 years later, you have built up, let's say around $30,000 in cash value on this policy, and you pass away. And it was a $125,000 permanent insurance policy, and let's just say there was $30,000 of cash value built up, and I'm just making the number up. How much does the beneficiary get if there's one beneficiary? Well, you would think take 125 plus 30 and get 135,000. 155,000, excuse me. It's kind of bad when the financial guy can't do math. That's not true. Your beneficiary only usually, in 98% of the cases, only gets the face value of the $125,000. What happened to that $30,000 of cash value that you are putting in monthly into this cash value account? The insurance company almost always keeps it. You don't get the cash value. So you don't get the cash value, number one. Number two, you can borrow it against it, but guess what? You have to pay the company, insurance company, interest on your own money, and they're already making money on things called fees. This is not smart. Now, it's interesting. If you start talking to a financial planner or an insurance agent that believes in permanent insurance, one of the quickest things that they've told me in the comeback and argument is, well, most people aren't disciplined enough to invest term, or we've got term and invest the difference. And that's why we recommend permanent insurance, because most people aren't disciplined. And I'm like, really? Would you really tell your client they're not disciplined? Because if you were to tell me that, I'd probably walk away. And, here's the thing. If you're not disciplined, whether you get term life insurance or investments, you know what you can do? Do pre-authorized checking. So if you get term insurance and you want to invest the difference in a good mutual fund, all you have to do is fill out a pre-authorized checking form, and then you invest the difference, and it comes out every single month, just like your DirecTV bill or your cable bill or your insurance bill, everything else that's coming out monthly. It's the same thing. So if you're not disciplined, go to automatic discipline and go to the pre-authorized checking route. So again, this is why I recommend getting term insurance and investing the difference. Again, the only difference I would say to that is if you've already got permanent insurance and you're no longer insurable, you need to keep that. Now, when we come back from the break, I'm going to take time to walk you through why term insurance, why get term and invest the difference. So I did a job of beating up the permanent insurance folks. And some of these people, when they sell permanent insurance, they mean well. They really think that's the best product for you. They're not trying to do smoke and mirrors. They're not trying to hoodwink you. They're just doing it. But I will tell you, permanent insurance is the highest commission for the insurance agent. So when we come back, we're going to talk about term insurance, why I want that, and walk you through how to get self-insured so you don't need life insurance. What would it be like if you didn't need life insurance and you were self-insured? That can happen. And we'll talk about that when we get back to the break. Again, this is the Strong Tower Financial Hour. I am Justin Bennett, your host, with the Webcast One Studios. We'll be back in just a minute.
From the RE/MAX Real Estate Concept Studios, this is Webcast One Live.
Hi, my name is Steve Bensmo with RE/MAX, where a house becomes a home. And when your host, Justin, wanted to sell his home, he gave me a call. I want to share a little bit about my buying philosophy when I work with home buyers. I always want to make sure that people are taking into consideration what home they can afford, not what home they think they can afford. So I ask a question around if they've really looked at what their budget looks like for buying a home. And there's for two reasons. One, I do not want my clients calling me in 2 to 3 years to do a short sale. I want people to be able to order pizza on Friday night and not be worried about the mortgage on Monday. So if you're looking for a home to buy, and you want someone on your side to make sure you're buying the right home for you right now, give me a call at 515-257-6531. Again, that's 515-257-6531. Or check me out on Facebook. Again, I'm Steve Bensimo with RE/MAX, where a house becomes a home, and I'm looking forward to working with you. Thanks.
Hi, this is Dan Fry, one of the hosts of A Rebel's Cause Radio. Did you know that you can like us on Facebook? That you can follow us on Twitter? That you can watch our previously recorded shows on YouTube? That you can listen to a live audio stream on Mixlr.com? That's mixlr.com/webcast-1-live. Or that you can email us with any ideas you have for the show at idea@arebelscause.com. And we want to say thank you. We love this show, but we couldn't do it without rebels like you who interact with us on a daily basis through these methods. So thanks for going with us on this journey in search of edutainment.
At Conroy Insurance Services, LLC, we help families and business owners protect their most valuable assets. We have established an excellent reputation with our clients, and we will continue to strive to exceed your expectations. Our talented team of insurance professionals are always available to assist you, and that is why we are independent, trusted, and preferred. Hi, I'm Bob Conroy. Contact me for all of your personal and business insurance needs at conroyllc.com.
From the RE/MAX Real Estate Concept Studios, this is Webcast One Live.
Thank you again for joining us. This is the Strong Tower Financial Hour, where we do help people from being broke and scared to having hope with a plan. I am Justin Bennett, your host, and again, thanks for joining us. We've been talking about insurance, and we're going to go back into roll insurance in just a second. But one of the things I want to mention on this show, if you ever watch this show or listen to it on a podcast and you're thinking, I have a question on anything financial, I want you to feel like you can email me anytime. My email address is justin@strongtowerconsulting.com, where you can email me your question. So maybe there are some insurance questions after today that you have, or how do I contact Bob Conroy with Conroy Insurance, or where do I get life insurance quotes or whatever, or again, what I do as a financial coach is I help people get out of debt, save money, do things like a budget, and get control of their money again. If you have any questions about anything financial, feel free to email me at justin@strongtowerconsulting.com, and I would love to do that. You can also follow us on Facebook at facebook.com/strongtoweriowa. We'd love to add you on as a fan. And again, thank you for being a part of the show. Well, we were talking about insurance in our last segment, life insurance to be specific. And when it comes to life insurance, there are two different types. Term insurance, then there's permanent insurance. And again, under permanent insurance, you may have heard of whole life, universal life, or variable universal life. Last segment, I was very clear. I'm not a fan of permanent insurance for various reasons. I'm a fan of term insurance. So if you missed out on that, make sure to back up in your podcast, or if you're watching on video, back up and watch that. Very important. So when it comes to term insurance, I mentioned earlier, I want to teach you how to become self-insured. So let's say New Year 2013, you're tired of being broke and you're wanting to get your finances under control. One of the first things I'm going to tell you to do is to follow the Dave Ramsey 7 baby steps on how to get out of debt and build wealth. In that process of doing the baby steps right from the beginning, one of the things you should do is get life insurance up to 10 times of your gross annual income to protect yourself. Now, let's walk through how you become self-insured using the Dave Ramsey 7 baby steps. Well, again, baby step one is where you do a $1,000 small junior baby emergency fund of $1,000. You put that in a separate account away from your checking account. Why is that important? Gives you some emergency, some pad, because as soon as we get this $1,000, we're going to start tackling debt. And this $1,000 will cover most of your little life's emergencies, like the alternator going out or the baseball going through a window or what have you. This $1,000 emergency fund should take you no more than 60 days if you're pushing it. Get this $1,000, have a garage sale, sell some things on eBay or Craigslist. When baby steps 1 is done, now go to baby step 2. This is where you do the debt snowball. And you list all of your debts, smallest to largest, based on balance, everything but the house. So your credit cards, your student loans, your car loans, outstanding medical debt or payday lenders or overdraft protection, second mortgages, you get it. List them out by balance, smallest to largest. Pay minimum payments on everything but the smallest one. And with everything you have, attack that debt. Get extra jobs, sell stuff, cut your lifestyle down. In fact, we just wrote a blog on that. So if you go to strongtowerconsulting.com, last week one of my blogs was actually on that, how to get the extra income necessary to pay off your debt. If you get the extra income, do the debt snowball. Most people can pay off a mountain of debt in 2 to 3 years. Some do it in 4, some do it in 1. But most pay off their debt, everything but their house, in 2 to 3 years. Baby step 3 is where we get a fully funded emergency fund of 3 to 6 months of expenses. So we've paid off the debt. Now we're going to take baby step 1, that $1,000 account, raise it to a fully funded emergency fund of 3 to 6 months of expenses. Folks, it's a lot easier to do when you don't have any debt. That normally takes, for the average household, 6 to 12 months. So baby step 1 takes 60 days. Baby step 2 on average takes 2 to 3 years. Baby step 3 on average takes 6 to 12 months. So to lay your foundation financially, meaning get out of debt and have some emergency fund savings, that's going to take you on average 3 to 4 years total. Do that, maybe 5 years to get to that place. And a lot of people can actually do it in 2.5 to 3 years if they're really pushing it. Imagine having no debt and an emergency fund. Now, at this point, you still need life insurance. So again, hopefully you got life insurance right away or anywhere in the baby steps. But now when you start working on baby steps 4, 5, and 6, baby step 4 is where you invest 15% of your income for retirement. Baby step 5, which is optional, saving for the kids' college. So if you're wanting to take care of that responsibility, either part or all of it, save for the kids' college. Baby step 6, this is where we pay off the house early. And most people can do baby steps 1 through 6, not counting 7, we'll talk about 7 in another show, but get through 1 through 6 in about 10 years, plus or minus. So let's walk through. Let's say you follow these baby steps. Let's say it even takes you 20 years to go through baby steps 1 to get to baby step 7. Let's just say it takes 20 years, it's slower than average. You have 3 to 6 months of savings in the bank. For most people, that's going to be anywhere from $20,000 to $30,000. So you have $20,000 to $30,000 parked for an emergency only, okay? All of your debt's paid off, not just your credit cards and your cars and your student loans, but your house. All of that's paid up. Add up all the payments you're paying right now. How much would that be? Well, for most people, not counting their house, is about $1,000. Now you've added another $1,000 to $1,500 in house payment. You have freed up $2,000 to at least $2,000, maybe $3,000 or more of money to go to that baby step 4 and start investing it. So again, you have a $20,000 to $30,000 emergency fund. You have no debt whatsoever. And if you've been investing steadily for 10 to 20 years in an investment, you could have $300,000, $400,000, $500,000 in your mutual funds. Do you need life insurance? If you've got $400,000 or $500,000 in life insurance, a paid-for home, $30,000 in the bank, and at least $2,000 or $3,000 of extra income every month just there to do whatever you want with, you won't need insurance. And that's the goal of term insurance. If you get 20-year level term, which is usually the best, but again, your situation might dictate 10 years. Some might dictate 30 years, but most in 20 years, if you do these baby steps, you won't need insurance anymore. And again, the good thing about term insurance, if you do it, especially the younger you are, it is very inexpensive. Again, we quoted earlier, I ran a quote today in 30 seconds online, and I found a healthy male, 30-year-old male in Iowa, for a $500,000 term policy, $20 a month. And by the way, if you have children, You don't need to buy separate policies for your kids. Make sure your term life insurance will allow you to do an old-fashioned thing called a children's rider. My wife and I have a children's rider on our kids, and we have 5 kids. Oh my goodness. And that doesn't cost that much at all. And I don't have it right in my head, but I want to say it's like $5 or $10 extra for 5 to 10 or for 5 kids rather. Wow, we don't have 10 kids. My wife would not want 10 kids, I don't think. But with 5 kids, and they're all covered. So if any of them, I hope never happens, pass on early, they're covered with a children's rider enough to bury and cover the expenses. So again, you don't need permanent insurance. You only need term. Again, the comebacks you're going to hear from the insurance agents, if you talk to them or financial planners, well, most people aren't disciplined enough to save the difference from permanent insurance and from term insurance. And again, I say, if you don't have the discipline, then you need to use pre-authorized checking, fill it out, and let it every month come right out of your account. But you need to be building discipline anyway. We haven't talked about it today, but if you're going to be building the discipline to have retirement money, when you retire, if you don't have the discipline to hold $10 in your wallet, you're going to burn through your retirement income pretty quick. And then what are you going to do when your retirement income's gone? You might have built up a nest egg of $500,000 or $1 million or more. Well, if you don't have the discipline to spend that money at a correct rate, it'll be gone. So if you don't have the discipline right now, you need to be building the discipline right now. And discipline's hard. It ain't easy. I mean, think about it. People who lose weight or people who get out of debt, it's all the same. They made right choices over time that may have seemed unpleasant, but later produced results. In fact, I'm going to misquote it, but in Hebrews, I think it's Hebrews 12:11 that says, discipline at the time is not good, it's painful. But in its time, it will yield a harvest of righteousness, or a harvest. And that's what we want. So we need to build that discipline. If you're struggling with discipline when it comes to your money, maybe you overspend. Maybe you don't have any money in savings because you're always spending it, or you're always using a credit card when it comes to things like food or gas, or you're not disciplined in doing a budget every month because you're embarrassed or you don't know how, or you're not disciplined to talk about this with your spouse or even your kids about money. This is what I recommend coming in, having a financial coach like myself help you get control of your money. Like I said earlier, I don't sell financial products. I don't sell insurance. I don't sell investments. I don't sell mortgages or any bank products. So you're not going to be sold anything. I simply teach, encourage you how to do better. So if that is of an interest to you, go to my website, strongtowerconsulting.com, and sign up for a free 30-minute consultation. strongtowerconsulting.com should be on your screen if you're watching it live or watching it recorded, and click on the free consultation link. I'm not going to be a used car salesman and keep you tied in until you say yes, but it's just for a chance for us to get to know each other better, and I can walk you through my coaching process. My average clients will pay off anywhere from $4,000 to $6,000 in debt in 90 days and save $1,000 in that Baby Step 1 emergency fund. But here's the thing. I just got done last year reviewing my numbers from the clients I worked with. Check this out, guys. And by the way, this wasn't me. These are my clients. So if any of my clients are listening out there, you did the work, not me, but I want to share this number with you, that with my clients last year, they paid off as a whole in 90 days an average or over together around about $265,000 in debt paid off. As a whole, as clients, they saved for emergency funds over $35,000. So with the clients of 2012 in Strong Tower Consulting, there was over a $30,000 change in position, or excuse me, a $300,000 change in position with $265,000 in debt gone and over $35,000 in debt and money saved. Wow. Now that was not each person, that was everybody as a whole. This stuff works. And again, the average individually was $4,000 to $6,000 in debt paid off in that Baby Step 1 fund of $1,000. Plus learning how to budget, being comfortable with talking with their spouse and getting on board with budgeting and those things. Any questions, go to go to strongtowerconsulting.com, free 30-minute consultation. Thank you again to Ryan Northfield for being our producer. Thank you to Webcast One Studios. We appreciate you being here at the Strong Tower Financial Hour. Have a good night.
podcast is designed to provide accurate and authoritative information with regards to the subject matter covered. It is sold with the understanding that neither the radio host nor the station are engaged in rendering legal, accounting, or other professional advice. If legal advice or other expert professional assistance is required, the services of a competent professional should be sought.